All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today what we're talking about is we're talking everything about KLIP, the Kraneshares China Internet and Covered Call Strategy ETF. The reason being is because today I want to talk to you guys why KLIP has really outperformed, and that's really due to the underlying stock being KWEB, which is the Chinese internet sector. So what I want to talk about with KLIP is why it was able to outperform. We're going to go into some concerns that we do have that you guys have mentioned as our subscribers, and we're going to go over potentially the trade war in China, but not really. I'm just going to touch on it super quick. Mainly, the main thing I want to talk about today is I want to talk about the holdings of KWEB and how, when looking at how they've been performing recently, why KLIP could really go even higher, and so could KWEB. And so this is a great opportunity for KLIP for the future, a great cover call strategy ETF. I want to explain why I really like their strategy and why it really relates to YMAX, maybe a popular yield max ETF you guys might hold. And I hope you guys do find this video very valuable. We're going to touch on a bunch of different kind of stocks and underlyings for KWEB and see exactly why KWEB is doing so well, and in return, why KLIP is able to generate 50% dividends off of KWEB. So if that does sound good, we're talking KLIP, KWEB, and everything in between. We're currently up to 4,514 subscribers, 261 subscribers in the past 28 days. Every day we're getting more and more subscribers, so thank you for that. Now, the only reason why I have YMAX up here is because YMAX is very similar to KLIP. YMAX holds kind of a basket of yield max stocks. It holds all the yield max stocks, and it's a cover call strategy ETF. I'm pretty sure it's really a synthetic cover call because they don't really own any underlying. The only underlying they own are yield max, and they're all synthetic. But KLIP is a cover call strategy ETF. Very similar, and the difference is that the underlying, they own all of the stocks and all of the shares that they're writing their cover calls on. And so KWEB is the underlying stock for KLIP, and because KWEB has done so well in the very recent past, KLIP has been taking advantage of that, and it's also been taking advantage of that in their dividend yield. I think it's really closer to about 50%, not 60%, but KWEB has a bunch of underlying stocks, and you can see all of their underlying stocks. These are just the top 10, and I really want to go over the top 5 today. But recently in China, all these KLIP and KWEB, they track the Chinese internet sector. And basically, the Chinese internet sector has been doing fantastic for the past month to 6 months or so within China. And you can see here, going by their biggest holdings, we have the first one being Tencent Holdings. We can see that it's poised to a new 6-month high. And when we go out to the 5-year calendar, we can see it still has a lot of room to grow. Notice how the actual stock price chart history of Tencent looks a lot like KWEB, which is the underlying stock for KLIP. So they are very similar, had a big run up in 2021, and so did Tencent too. And it looks like they could have a potential bull run on their hands because they're approaching a new kind of like breaking point here, area of resistance at about $45. And so if Tencent is able to break $45 or so, we can go see the stock goes high as $60, another 30 to 40%, which obviously would drive up KWEB even more. Going to their next biggest holding, we're looking at Alibaba. Alibaba has actually taken a pretty massive hit in the past little while, going from about a $300 stock to under a $100 stock. And the reason why I really think Alibaba is going to do absolutely fine. Look, in COVID, what is Alibaba? Alibaba is an online internet kind of like Amazon, but it's for suppliers. It's basically a manufacturing hub for companies on Amazon in order that use Alibaba to produce goods. So I actually do use Alibaba. I am a customer of Alibaba. Because I do run an online Amazon business, and Alibaba is only growing bigger and bigger every day, and more people are using it every day, to be honest. And what I see here is I see kind of a really beaten down stock with no purpose behind it because there's still so much tools available on Alibaba, and there's so much things that people are still doing, yet the stock price is so beaten down. So I do think there is a great recovery in return for Alibaba. I don't see it going anywhere anytime soon. Still a $200 billion company. Earnings per share is doing fantastic. And I do think they'll get back to markers above 100 and then hopefully markers previously, maybe about the $200 marker. So that's another bullish sign for KWEB. The underlying stocks that KWEB holds in the tech sector for China are fantastic. They have great potential, And they're also great big businesses. And this is why it's so good, because for a cover call strategy ETF like KLIP, you want a stable underlying that doesn't necessarily move too much, but it does have, like, you want a bit of volatility, but you don't want crazy volatility to the downside, because then it really brings down the price and it's difficult to recover. But for KLIP, for the most part, KWEB has had pretty stable price returns. You can see here it went down a little bit, but it's on a bit of an uptrend, and a lot of the stocks in the underlying KWEB are going to be in an uptrend soon, which is very exciting. Then we have the third biggest holding, which is Meituan, Class B stock. I found Meituan. It's roughly a $85 billion company, and you can see here, same kind of price chart as KWEB here. It was up in 2021, beaten down, and over the past 6 months, and really the past 3 months, it's grown over 100%, which is fantastic, about 100% or so. And really, they're meeting another big resistance level, and this is why this video is so crucial, because stocks like Tencent, stocks like Meituan are meeting these big resistance levels where if they're able to push through, they could have great returns for KWEB. And this, if you are a KWEB holder, which we do mention on this channel, or sorry, a KLIP holder, then you could really benefit from this, and this might be the opportunity that you have been waiting for within KLIP. So I just want to bring it to your attention. Another stock, PDD, which is the fourth biggest holding for KWEB, is also doing really good over the past year and over the past, really, their max chart history. So you could see going all the way back to 2018, big run up 2021, and they're slowly recovering back to those levels. This is what we'd hopefully like to see in all of these underlyings. Maybe PDD holdings is a little bit ahead of these holdings, but you could see here, great stock price chart, and could meet some resistance in about $20 or so at about $145. But definitely doing well there. And then this is actually the sixth biggest holding, because I couldn't find trip.com, but I found NetEase Inc. And NetEase, we'll call it NetEase, a $61 billion company. Once again, earnings per share absolutely fine. You can see they're paying out a dividend. Long-term price chart history, fantastic. Growing over time. You can see that they're close to like hitting and meeting these resistance levels. If they're able to push through, they're going to get to an all-time high. So I do think KWEB is poised for a great uptrend in the future. Obviously, it's just kind of something that is really starting now. In KWEB, we're seeing great appreciation, and hopefully with all the underlying stocks having somewhat of a bullish kind of path going into this, we could see KWEB potentially push through to some great appreciation, which in turn should give KLIP some great appreciation, and still a 60, really I think it's a 50% dividend, but a great dividend yield on this. Now, one concern that was brought up by our subscribers was, for example, I want to give a shout out to Tom USA, number one. You are number one, baby, today in this video, because he mentions how there's a trade war against China and the US waging. I did a little bit of research. People think that there could be a little bit more turbulence in 2024. The trade war being, I don't know everything about this. This is just me reading the article, but it's over panics of spies and ballots, and over semiconductors, and intensifying military rivalry. What I see here is I see two big world powers. We have the USA versus China. Really, there's always going to be tensions whenever you have rising powers like China is up and coming against the US. I do think that everything is going to be okay in the short term. I don't think it's really going to affect KLIP and KWEB as much as you might think. KWEB is only a $5 billion Chinese internet ETF, and although the trade war might have some significance in kind of day-to-day fluctuations, I think long-term KWEB is going to appreciate well, which hopefully will in turn give KLIP good appreciation too. So I hope you guys enjoyed this video. I hope it showed you a little bit more about KWEB, their underlying holdings, how they're performing so far, and why I do think there's potential for the next little while to be a great kind of time for KWEB and a great time for KLIP. I'll keep you posted on my KLIP position here. I got 150 shares, and I'll do my best to keep you posted. If you guys enjoyed this video, we are currently up to 4,513 subscribers, losing subscribers. Actually, I'm a liar, so look at that. And I hope you guys, please do subscribe and get this number back up if you wish. I hope you guys enjoyed this video. I hope to see you guys in the next one, and I hope you guys do take care.